Morning. Morning. And so, as we all know, the markets took a little bit of a hit again, Mr. Schizo. After being up, took a dive back down on the president's comments of additional tariffs on China. And while we've seen this market go up and down, I think the most significant thing that occurred yesterday was the fact that interest rates dived lower. We typically look at bond prices, and they were in a trading range. And so TBT is the ETF inverse of bonds, and it went down through this prior low here, and the way it went down through it, and it suggests it's going to go lower. So with that occurring, interest rates going lower, we're back to the inverted yield curve concerns. And earlier, the shorter term durations against some of the ones closer to it had already inverted, and things began to improve as these yields went up here. And so now, we're closely watching this. This is the most extreme, which I've always looked at over the years, the most extreme separations between the shortest, the 3-month, and the furthest out, the 30-year. And why we look at this, I mean, it takes a very long time for something to actually happen compared to, say, intraday trading, where we get a NYSE tick extreme, where we look for a turn in the market in the moment. This can take months sometimes. But things are moving faster than they used to, and they always continue to move faster and faster as time goes on, and information becomes more widely available, and more become educated as to what to look for. Whereas like back in 2000, very few were ever talking about the fact that the yield curve inverted and that the transports were going down, and there were all these signs of an impending bear market that was coming. Everyone was just enamored with the way stocks were going up through 1999 and the internet, blah, blah, blah. And then, there was that crushing bear market at the time. So, you can see here in 2007 and 8 what happened, and down it went. And we're still in an uptrend here, and we have not gotten inverted yet. But based on this TBT, if this doesn't turn around relatively soon, this is going to meet, and I don't think the Fed could lower interest rates fast enough to stop this from catching up. Yeah, I know that. If you look at the 3-month versus the 5-year, it's inverted. It was last time I looked. I don't know if it improved much from when TBT started going up, but so this is something we'll be keeping an eye on to see if it does get inverted. It certainly looks like, the way what's happening here, that is a probability, but, things change. So just make everybody aware, this is kind of what we need to keep an eye on in the broader markets. So what happened yesterday, certainly, I don't think that's going to get itself turned around in the moment, as it comes down to some support, which we can see. I believe the Dow futures are already on the 50 MA in the area of this prior low, but look at how it came down the last 2 days. And look at the tail. That's real, where prices had rallied all the way back up almost to the high of the red bar, and then collapsed all the way back down again. Pretty crazy kind of trading. But so we'll see what happens if it broke through this prior swing low. So now it's going to be testing that low, and we have on the weekly time frame a breakout that has failed, and still in an uptrend. And we'll see, as we just monitor step by step to see what the reaction is at the reference points that were created from the past, whether it's what I'll call a real reference point created with money, a swing low, or a subjective reference point like a moving average that is widely followed, and it'll come into play where institutions look at that simple 50-period moving average and that 200-period simple period moving average to see what the reactions there are there. So little stabilization there so far this morning. Things are down. When we get to the futures, we'll get a clearer chart. But we can see the spiders coming up here a little bit, and 293, not quite to the 50 MA, but getting closer. And we've got these gaps over here. But breaking of this prior swing, breaking below this prior swing, and my own personal rules, in an uptrend like this, when you get one violent drop that takes out two prior swing lows, while it's not making lower highs and lower lows yet to be a defined downtrend, I move my bias from up to down. And that's just based on historical observations and looking at thousands of charts, that it just makes sense to consider this a downtrend and to short the next rally, as long as it doesn't come all the way back up to the top, of course. So we'll see what the reaction is here. And Qs, didn't break below the prior one. But this one has now been violated, so the uptrend here is over. We've got a pretty potent reversal on the weekly. We'll see what today can muster as far as some kind of reversal. I wouldn't expect much, but that's just thinking. I can't. Can you please make video trading by candles only? If you're talking, I'm answering someone in YouTube, those of you that are in the green room. If you're asking me to make a video about candlesticks and how to use them, you probably find them on the Master Trader channel. If you search candlesticks, you probably find something there. So Qs coming down toward that prior swing, where I would expect buyers will be stepping up. So get close to 188 in that area, some stabilization. But look how it formed a topping tail. It popped up and it came right in. So that could suggest it's going to go lower, but I wouldn't be so anxious to short this market here at the open, since of the way it came down. I'd give it a little bit of time. That's my personal bias, not to give it a little time, since it already made a move all the way down to this support. SPY nearly officially downtrend, just broke the downtrend, not yet in the downtrend. Right, Tony. So look, this higher highs and higher lows. So in the trend matrix that I update in the ETF letter, right, what I would be saying or marking in that matrix this weekend, since this violated a swing low, it's not in a downtrend, right? But I'll move it to a sideways trend. And then if it breaks down below here, I'm going to call it a downtrend. But so if it comes down in one swoop down through two major support levels, I move it to downtrend. And even a break of this one, we can short a retracement. But one of the things I mentioned the other day was where we began to talk about this breakout failure. And I said, well, if it violates this major support area, the next one is close at hand. So when you have trends, right, uptrends of higher highs and higher lows, they don't all form in the same way. Sometimes this prior low is a wide distance from that prior low, which opens up the door for a bigger move, since the next reference point is close at hand. Whereas when you have a more choppy type of uptrend where the swings are relatively close together, the expectation is that you're not going to get a big drop in this time frame. So yesterday, yes, was a big drop, but it was falling from here to that reference point. Now, between these reference points, they're close together, which historically suggests that it'll hit that point and then start to retrace again. And, from there, we'll see how far it retraces. And that's just with looking at charts the way we would, just based on historical norms. Now, when you have something that like this, that just, well, it didn't get that far below, but you can see how it stalled in that area. But when you have something that moves as fast as this is, and goes down through that, two lows like that, you just read that as that's power, right? Meaning there was virtually a total disregard for those two reference points. Now we know intraday there was some attempts to hold those points, but as we look at this compressed data, the daily, it went through those two reference points fast. And that, you just read that as being power, and it's black and white that this is institutional selling. And, this whole China thing, which has been reemerging and going to sleep and coming back now for the longest period of time, they're worried the hell about it, and we see what's happening in the yield curve. And so when we can say, well, these institutions are nervous. Well, maybe they just, for whatever reason, the market's going up for 9+ years. They're just nervous, and looking at the exit doors all the time. But then we look at some other information like a yield curve and TBT and say, well, this is a valid reason to be nervous of what's happening here. With yesterday's fall due to news, I don't look at it differently, Clint. I mean, one of the conflicts with, trading on technicals and human nature is, just technically we're supposed to ignore the news, so to speak. But how do we ignore the news when it's affecting the world? We just have to try and keep what's going on in between our ears in check and look at the charts with our systematic method and say, this is what's happening right now. And so what the reaction might be to this in the moment or over the next day or two can be very different than what the reaction was over the charts that we looked at 5 years ago, 10 years ago, 25 years ago. Overall, the big picture bias is going to be the same, as we have a yield curve that are inverted or beginning to inversion, and we start seeing other confirming analysis that says this is what's happening. And then here we're looking at one piece of information as to the speed at which prices went through support points, which is power. Now, if this happened and we didn't have yield curves inverting and other things were still just, not aligned in a more bearish way, we say, okay, well, here's a normal correction coming versus something that could be much more bearish or devastating, if you will, based on what happens historically. So everything that we look at is to align our bias with the reality of what the charts are telling us, the intermarket part, the market internals versus, hey, you know what, I believe X and XYZ is going to happen. Well, based on what? Oh, it broke a trend line. No, we look at these type of things that historically they guide us, and then we say how many tea leaves are lined up, as I've explained, yield curves, even the transports which have been lagging, they came down like, a stone off a roof yesterday. So a lot of these things are coming together to say, yeah, I mean, this bearish concerns, where, one guy on CNBC was saying, oh, this China thing is overblown, whatever. Okay, fine. But hey, do you want to sit through what could be a 20% correction or maybe even worse if that yield curve gets inverted? So, or can I protect things either through option strategies or reducing positions and just do things intelligently based on historical information, right? So this got, we've been talking about this head and shoulders top that, I talked about the deeper move to the downside here, but, that's a big red bar. The insanity trophy goes to the Russell with these giant green bar, red, up, down, giant, closing above, breakout, back down again. I mean, that's really insane. Yeah. So, we just look at what is, we put it together, and we create our bias as to what the probabilities are. And then we find opportunities to, we believe, to make money with controlled risk. And look, As much as we can put the tea leaves together, there's no guarantees that in the moment we're right. Sometimes we're right, but in the moment, it just didn't work out that way. So you step aside and you re-enter, which I know stinks, but sometimes we get whipsawed too. Right. So anyway, here you got a clear break of 2 prior swing lows on the S&Ps. They're coming down to the 50 MA. Simple. The next level is here. 50 MA, while subjective, it's widely followed, and you can see it's reacting to it right now. People are watching it. NQs coming down to the prior swing low. 50 MA is down here. Stabilization. Right? Same thing. Big reversal here. It's still in an uptrend. But notice, right, this is something that we talked about and some other prior thing. Look at the speed, the drop. Barely took out the high, and now it's stalled. Right? So I point that out for those indicator junkies that'll be showing the bearish divergence there with 2020 hindsight that the market pulled back. You don't need this. Right? This is one simple way to look at slowing momentum without putting the things that'll cloud your judgment on your chart there. There's my little tool. Okay, let me keep going because you know it's getting late. I'm going to look at the same stuff. Dow was already down to support in the 50 MA. Oil went down. Right, confirmation. If you think there's going to be a recession, business is going to be slowing, there's going to be less demand for oil. Okay, it went down. Yields went down, which means there's going to be less demand for money. Right, that's recession type of action. Now we were waiting to see if it all follows through. Right, bonds broke out. They were at resistance. We've been looking at this for a month. That's the consolidation. And here I told you if this head and shoulders top failed, moving up instead of down, it would be a violent move, and it certainly was. Right, news driven or not, the historical pattern played out. Interestingly here, gold, maybe moving to there since the markets went down. We'll see. Silver, right, it led the way up, so it's lagging there a little bit. So some bearish moves. Today's Friday. It could be a consolidation day since we did have a pretty sharp move to the downside, even though it was, I think Dan called it a missile day yesterday. It went up and then the missile ran out of fuel and came back down again. And so now we'll just see what buyers want to do here or not over the next several hours. So all yours, Dan.
All right, thanks. Good morning. There's a lot of gappers here again. Let me go through opens really quick. In the weekly, Intuit, Mike was telling me yesterday it stopped out at the 1X. Zulu Mike, we legged into a Condor. Swing options, so we only have 2 trades there. We have we're long BSX, triggered yesterday. CDW, we legged into a covered call. NTNX, we're short stock, looks good. Coup, a call spread. Z Zulu, long stock on the breakout. Crowd, put spread. And finally, TERP, core long. All right, so no problems with those positions. Tandem here, $67. It's I don't know, therapeutics, whatever. It's a bullish gap, so actually it's a put spread candidate. MSI 164. Looks lower, but GoDaddy is a mess. Glue is becoming unglued today. That's a very bearish gap, but it's excessive. Grub, $69. That's a bullish gap. And today's option expiration Friday. So I will be looking to sell naked options and spreads on any compelling pattern. And this is one. If this can hold, That's a put spread candidate for today. G Pro, that's garbage. You're gone. Medical device. All right, thanks. Yeah, so yeah, I'm going to put that in the window. I like that one for a put spread. So tandem. And I like Grove too for a put spread. 251 bearish gap. And so now that you have this bearish gap, it kind of looks like a condor candidate because this entire island is resistance, but this is a lot of support. So condor candidate, unless at the open it becomes ultra bullish or bearish, then you only take the one side. XPO, it's garbage. Charlie. This was the one, remember, when we were scanning yesterday afternoon, I said was going to be an absolute no-brainer short, but it had earnings. And you can see the earnings are gapping in the way of the bias of the bearish daily and weekly. MTZ, 53 bucks, bullish gap, but it's to a nasty brick wall right there. Or 2-bar reversal. APHA 672, that's a very bullish gap. Oh, I think this was the one. Hey, Greg, remember we were talking about news being, on the cover of Barron's, but nothing's changed under the hood. This is a perfect example of this, where this stock is gapping up because Carl Icahn just released a statement saying that he accumulated X%. So absolutely nothing has changed under the hood, and it's gapping up with whatever percent. That's craziness. 37, it's a bullish gap, but kind of excessive. This would be a tier 1 gap if it were gapping, to 35 bucks, because then you got a big old price void, but it's, 37.70. Acor, that was another no-brainer short yesterday. Alex says DVA 60.30. 30-minute high or over yesterday's high. I like the 2-bar reversal on the monthly. MTD getting slapped 738. Wow, that's an expensive stock. We'll come back to it. There's no volume here, but if it's gapping to 10 bucks, that's very bearish. Oh, here's DVA right there. LM, I can't tell where it's gapping. HIG, can't believe there's no volume on some of those big boys. Or did I just lose my pre-market? No, I got pre-market data. This would have been a no-brainer, but for earnings, this setup on the daily, weekly, monthly, all in beautiful alignment of bearishness. Look on the monthly, you have a bearish 1, 2, 3, 4, right at the prior low. So this consolidation is absorbing this support. That's a nasty gap. Old NTAP, that used to be a high flyer in the internet days. All right, less than a minute to go. This was also a bearish setup. It's gapping under on earnings. GPOR, this is garbage. CBPX, and garbage. Fizz is not earnings, but it's being added to, I think, the S&P 500 maybe. 46.75, it's a bullish gap. See, once again, isn't that interesting? Under the hood, nothing changed. It's just the way the markets work. If you're in the S&P 500, funds are going to have to buy you because of their asset allocation. SGMS, bearish gap. Herbalife, bearish gap. It's in a free fall, can't chase it, FND. Oh, here we go, folks. That is a beautiful gap. 5-minute high is beautifulness. That is a beautiful gap right over this resistance. I mean, aggressive as heck is 1-minute high, which I cannot be that aggressive. That is a beautiful gap. Tandem here. I'm going to check right now. Well, I'm going to check them both for put spreads. But you know, earnings a minute after the market. Market makers are crooks. Good luck getting tight spreads. Yep, this jackass. Everything is 0 by 490. Just incredible.